Hey guys, welcome to this video. You've already done your first QuickBooks assignment and I know you have errors, and so I wanted to go back and maybe offer some advice on helping you correct some errors. My neighbor's cutting his grass, so just ignore that, and sometimes the dog can bark at him, but just ignore that. First, I want to make sure that you watched all the previous videos I made. I need you to have done that if you haven't, just because it puts us on the same page. In other words, I know what you've already seen. So I'm just going to go ahead and assume you've watched all those previous videos. Now, this textbook starts out in chapter 1, 2, and then we don't have an assignment till chapter 3. However, you really need to go through. When I worked through this myself, because I was assigned this course to teach a while back, a couple of terms ago, and I had never gone through this textbook, so I wanted to see what the textbook was all about. So I worked through the textbook, and what I found was that if I didn't go through each chapter, and even though the work wasn't due until chapter 3, if I hadn't gone through and got that foundation in chapters 1 and 2, I ran into a lot of trouble. And if you go through and you don't actually work the chapter with the authors, don't just read to do this, actually go ahead and do it, then you're going to spend a little bit of time on the front end, but you're going to save yourself a whole lot of time on the back end. When I tried to, when I just went straight to the case, I found that I maybe didn't understand exactly what they were asking for, but when I went through the chapter and worked it, I was like, oh, I understand. So make sure you kind of do that. So let's say, for example, that we are looking at case 1, right? Now, the nice thing about this is that we know what the answer is, right? If you go to the end of the case, no, that's not it. Let's go to the end of the case. It tells you the trial balance. So it tells you what this should look like. And so what you can do is, after you do each step, you can go in and it's, you do a step here. It says, add checking account, $25,000 balance. Then you run a trial balance. See what the trial balance looks like. Does it have your checking account on there for $25,000? It has what it has what I expect. So then if it doesn't, I can go back and fix it, right? Let's look at the test site, because the test site isn't going to have the same numbers as this, but we can use it as as a way for me to show you something. So I'm in the test site, and let's go to the chart of accounts. So the chart of accounts is going to list all the accounts and the current balances, and the accounts are listed like this. First you got your assets, then you get down, you get to your liabilities, and then you get down to your equity, right? And then you get down to service revenue, and then you get down to your expenses. Okay, so this shows us the balances that we have, and that can be useful because we can go in sometimes and edit these things. This is good, especially if you found, hey, I put prepaid rent in the wrong place. Remember, prepaid rent, a prepaid expense, is an asset. Oftentimes I see it, on the trial balance. Let's show trial balance. If I see that the prepaid expense is down here, but way down the bottom, I know that somebody coded it as an expense and not an asset. If I prepay for February rent, let's say this is January, I prepay for February. Well, it's not an expense until February happens. So that's why prepaid expenses are really assets. If I accidentally made prepaid rent into an expense, you can go down and you can edit it here, and you can adjust the account type and all that stuff. So that's an easy way, using the chart of accounts, to jump straight into something. If I run a report, let's say I run my trial balance. All right, well, and one common mistake, very common mistake, I did this a bunch of times, was making sure the right dates were up here. So if you get to something that you need to correct, you can usually just go right into the transactions that occurred. So for this trial balance, you can run a trial balance after every transaction you made and then see, if there's something that needs to be changed. So with this example, this test company, most of these are opening balances in the balance sheet part, so the assets and liabilities. So if you want to fix any of these balances, go to the chart of accounts that we're just showing you, since most of these aren't actual transactions. But let's look at another one. Let's look at these are costs, right? So these are revenues and costs. Let's say we have something that's wrong in advertising. So this will possibly take us where we want to go, straight ahead. So in this case, the amount was wrong. Maybe it was supposed to be 174. So I can fix that. And sometimes that helps you to zero in on the error, doing it that way. So that might be of some use to you. Maybe the first thing you would do is just to go back into the chapter, try to follow the instructions in the chapter. But if you're having trouble zeroing in on the error, then maybe using the trial balance is something that could be useful. I wouldn't say this would help you in all instances, but in some instances it might. Right? Now, the one last thing I'll tell you is that because this is a company, this case 1 builds, so all the balances in the trial balance are going to be used for chapter 4 and on. So for example, in chapter 3, if you end here and you ended up having checking account worth $20,000, when you go to chapter 4, your checking account is going to be worth $20,000. And so if at the end of the chapter 4 you look at your trial balance, it's not going to. There's no way that checking can be correct because those accounts are building on each other. All right, I know it's frustrating, but it does get easier as we go along, because as we go along, you get really used to working through this. It's just the first assignment in particular is difficult because you kind of have a learning curve as far as dealing with QuickBooks.